Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement with Chris Mcintire. Mcintire Retirement Services, Northwest Ohio's retirement planning resource.
And welcome into the program. This is your Game Plan for Retirement with Northwestern Ohio's resource for a common sense approach to planning, helping to clarify and uncomplicate the financial, the investment, the retirement planning world. He is Chris Mcintire, giving us direction on the economic and the financial world that we need in this day and age. Because, Chris, there is a lot of confusion. There's a lot of complexities. There's a lot in the news that we really have to worry about. But today we're going to be covering this list of 10 steps to prepare for retirement. I think if people followed these 10 steps, they'd probably find a lot of clarity and confidence.
And Peter, we might need to make 11 steps, turn off the news, right?
Yeah, well, there's that. Yes, that would certainly help. Chris, I've heard you've done that and gotten a little less stressed out.
Yeah, with everything that's going on out there, politics aside, but between social media, coronavirus, and the politics of everything these days, boy, sometimes it's just better to do what you can and turn it off at the end of the day. You and I live in a news cycle kind of industry anyway, so it's not like we don't pay any attention to it. But at the end of the day, the last thing I do is watch the news from 6 o'clock until 9 o'clock at night. I'm just done with it. I want to read the history. Thankfully, we've got the NHL season that's going to be starting again, so that'll really keep my interest peaked there. Yeah,
down here in my neck of the woods, we've got the Carolina Hurricanes kicking off the season against the Stanley Cup champions. So we'll pay attention to that one and root for the good guys, the Canes.
Hey, and I'm about half a Caniac as well. They got Rod Brendamore as a coach down there. So you'd certainly have a wonderful hockey climate. I need to get down there and see a game with you too, buddy.
Come on down, Chris. We'd love to have you. Well, today, again, we're going to talk about these two resources that you have made available, these lists of the 10 steps to prepare for retirement and the Are You Ready guide. And each one of these kind of talks about some different aspects of getting ready and prepared for retirement. Again, I think if any saver, investor that has financial concerns or wants to make sure that they are doing the best thing for your future, ladies and gentlemen, if you'd go through these things on your own time or with the help of a qualified professional, which Chris Mcintire offers to do with you, then you would find a lot of confidence. And again, if you would like to be in touch with Chris, the team at Mcintire Retirement Services, or request either of these reports and these lists, pick up the phone and give a call. 800-868-1194 is the number to reach Mcintire Retirement Services. That is 800-868-1194, 800-868-1194, 800-868-1194, or you can go online, McIntyreRetirementServices.com. Lots of fantastic resources available there as well. But Chris, you break these 10 steps down into pretty easy to understand language, and it really is kind of a step-by-step process, each step building on the next until we've achieved that retirement foundation.
Yeah, not quite like Moses there with the 10 commandments, but these 10 steps are some pretty good foundational places to start, and the first one is defining your budget, Peter. And, if you're going to go into retirement, you obviously have to work off of your income coming in versus the money that's going out. You need to know those numbers. What is our retirement budget? What are we going to be spending? And, a lot of times we deal with people whose house is already paid for. We deal with people that don't have any outstanding debt. So, property taxes, food, medicines, some of the basics. Some people can, subsist very well within their means, if you will. Some folks own a second home somewhere, and that may have a mortgage. And, so we deal with a lot of different types of scenarios on, some people don't need much income at starting their retirement. Some people say, look, we're going to hit the ground running when we retire, want to take advantage of good health. We want to travel the world. Hopefully we can do that here after Corona or whatever. but travel the United States, if nothing else, and spend substantially more money in the first 10 years of retirement, and then probably become a little bit more stationary, if you will.
Yeah. How do you do that, though, without the concern that you're going to spend yourself out of an enjoyable comfort quality of life in those last several years? And that is really what defining that budget is all about. Chris, can we call it a spending plan? There's something about the word budget that just feels limiting to me, whereas a spending plan will help me keep it between the guardrails. I can go in the fast lane, I can go in the slow lane, but at least I know that I'm on the road and heading in the right direction. It gives me kind of the freedom to move around a little bit. It's a perception, I guess.
Yeah, I'm with you on that, Peter. And, understanding what's going out certainly helps you, understand what needs to come in, which is the next piece is, define your sources of guaranteed income, Social Security, pensions. If you're going to take money out of an annuity as part of your retirement, what is that annuity payment going to be? Will any of those factors increase? We've had a little pretty fair bump in the Social Security increase for 2022. That helps people combat with some inflation here. So, probably a bigger one than we've had in, essentially the last decade or so, Peter, after some very mild cost of living adjustments and sometimes no cost of living adjustment. So, when we run our retirement scenarios for people based off of our software system, I only use a 1% cost of living adjustment on Social Security, because you got to remember, when I'm on Medicare premiums can increase, and that might offset the cost of living adjustment I get from my increased Social Security payment. So I only use 1% on that.
Well, we've talked, Chris, about how your outcome is only as good as the reliability of the assumptions that are made in the planning process. And a lot of people are assuming a very high rate of return, seen a lot of forecast models that assume that Social Security will give us a true cost of living adjustment when there are years where it has been zero. And so I think that during the planning process, as we are mapping these things out, kind of taking the mindset and the perspective of Murphy's Law and being very conservative and assuming some of the worst things that can happen will, that gives us more confidence as we see that the plan still works despite those. And then we can move forward knowing that that plan is in place, which forecasts some of the negative assumptions that we could make, not just positive pie in the sky, rose colored glasses assumptions.
Yeah. And a lot of people, that's what they're after. They want someone to tell them what they want to hear, not what they need to hear. And, so sometimes we have to have some sobering conversations with people and let them know that, look, 65 isn't your retirement year. It's probably 68 if you buckle down. And, that's what we get paid to do. We are fiduciaries. We have to tell them what they, what has to happen, not what we hope will happen.
But I'd rather hear that at 63 or 64 and know that that is the case, rather than understand, whoops, I made a mistake at 73 or 74. I should have worked a few extra years.
Yes. And, and that happens a lot, obviously, here in the United States, because so much of the responsibility falls onto ourselves. Many people that are listening to the show today, have had to save for their own retirement through 401ks, 403bs, and not the company sponsored pension plans that, parents and grandparents probably, were able to take a part in. They worked at the same place. My grandfather worked at Tappan Industries in Mansfield, Ohio, basically his entire career, retired with a very nice pension and Social Security. Those days are gone.
However, do those things keep up truly with the cost of living? And that's why step 3 in your 10 steps to prepare for retirement, Chris talks about what we are going to have to generate from our personal assets. And that previous generation, maybe they didn't save as aggressively. They didn't have the 401k available to them. They had more of the income for retirement provided by the company they worked for through the pension, and Social Security made up a larger piece of what they needed to have a comfortable standard of living. Today, we don't have as many pensions, not nearly. And Social Security doesn't account for a large part of a high quality of life. It basically is designed to keep us just barely above the poverty line. And so we've got those personal assets that we've done a better job in saving and accumulating. Yes, but we have to understand how much we're going to need to rely on those assets. So step 3, define your income gap. This basically is the answer to the question, how much do I need to retire, or how much do I need to pull from my retirement accounts?
Yeah, you're correct, Peter. I'll give you an example, like I've used many times here on the show over the years is, my father-in-law's been retired for 43 years. He's 92. He still gets the same exact pension payment in 2021 that he got in 43 years ago in 1980, basically the same dollar amount. And we all know that gas is $3.30 a gallon, basically right now. It did not cost that much a gallon in 1980, for example.
No, sure didn't. A set of 4 tires cost under $200. Today, 1 tire cost about $200. Inflation is real, and especially impactful over a longer period of time. So we might not feel it in the first few years of retirement, but in decades in retirement, we certainly are. And Chris, it is a factor right now, maybe more than ever, as you mentioned. Once again, ladies and gentlemen, we're going over this list of the 10 steps to prepare for retirement with your resource for that common sense approach and for guidance and perspective on how to plan effectively for retirement, Chris Mcintire. If you would like this resource to go over on your own time, to go over with a spouse, a loved one, a family member, a friend, even a coworker who has been talking about retiring, they will be grateful if you put this list in their hands. It's fantastic food for thought, and you can get your hands on this list just by calling 800-868-1194, 800-868-1194. If you can't, stay tuned in for the duration of the entirety of the program. I highly encourage you to give a call now and request the full list. 800-868-1194. That's 800-868-1194. But Chris, a lot of financial forecasts haven't even addressed these first 3 steps. They sort of focus on the lump sum that we've saved and the projected rate of return we might be able to make into the future, and then pick an arbitrary cash flow number that we draw down from it. These first 3 steps are much more reliable, much more mathematic than those kind of assumptions that many plans and projections make.
Yeah. And, we all have to use some form of projections when we're running scenarios and then factor in, what do we think the real life circumstances are, and let's take 2021, for example. Look at where inflation is at right now. There is a lot of shortages of supplies out there right now. And, it's hard to run a scenario where, okay, inflation is going to run at 2 or 3% over the course of your retirement. All of a sudden we get a couple of years where it's up to 5 or 7%, based off of what your expenses are and dictating what you need to. At 6-7%, that's some huge inflation numbers. 7% for 5 years is 35% more income you're going to need. That's a hit. Not many people are prepared for that because we haven't dealt with a lot of inflation in the past, basically, Peter, since the 2002, kind of that tech bubble way back when, the terrorist attacks of 2001, which we just had that 20-year anniversary of. But we have not had a lot of inflation since that time. And, I remember the lean years of the 1970s. Being a kid, there wasn't many Christmas presents under the tree. And, right now they're saying this year, order your Christmas presents early because all the supply chain glitches that are out there, things are going to be expensive. Paper products right now, once again, we have a client that works in the paper business, and he had told us, he said, hey, order extra paper right now because we're seeing supply shortages coming. And, as soon as you say that, everybody says, they say, don't panic and buy everything. Well, guess what Americans do? They panic and buy everything.
That's right. That's right. But again, ladies and gentlemen, you tune into this program, you get important information. Go ahead and start that Christmas shopping early. If you take nothing else away from this program, that's great advice from Chris Mcintire, because we have seen these supply chain issues, and it may be a bigger issue than certainly just Christmas presents. But we need to understand the situation that we are in. We need to be preparing, and that's what this list of the 10 steps to prepare for retirement is aimed to help you do, is think through the issues that you will face into the future proactively, well ahead of time, so you don't run into problems last minute. That's got the Christmas conversation, kind of a microcosm of what we're talking about here. You need to be proactive and think ahead. And that's what this list will help you do. If you'd like to get a copy, pick up the phone, give a call, 800-868-1194, 800-868-1194. So Chris, as we've defined the budget or spending plan, as we've defined the guaranteed sources of income, defined the income gap, the amount that our personal assets are going to have to generate for us, we want to minimize that number as much as possible. And so there are some steps that we can take. Number 4 on the list is strategize on Social Security. Don't just run out and claim and collect it the first day that you're eligible. Actually think it through and strategize, because the difference in certain strategies or combinations of strategies between a married couple can make the difference of several hundreds of thousands of dollars over our lifetimes that we either get from Social Security or we have to generate from our personal assets.
And yeah, Peter, very important on the timing of Social Security benefits. Yeah, we use Social Security Pro as one of our software programs to run analysis on, what's going to get you the most money out of the Social Security side of things. And again, every case is in, if somebody's got some substantial savings in 401ks, then, they can certainly weather the storm and take money out of the 401k, delay taking that Social Security for a couple of years and get an increasing payment on that. My full retirement age is 67. Okay. So that's when that's how they base your Social Security off your full retirement age. They call it the primary insurance amount. So, but if I wait until age 70, I get an 8% increase in my Social Security payment from age 67 to 68, from age 68 to 69, and from age 69 to age 70. So I would get 24% more on my Social Security payment. It's starting at age 70 then versus age 67. And, man, that's a substantial increase in income, and then you have to strategize. Okay, well, what am I going to do for income between age 67 and age 70, for example? Am I going to take money out of IRAs, Roth IRAs, savings, other investments? Do you have a plan B if that's, if plan A was to take Social Security early and get the least amount, what is plan B then to come behind that in case, plan A doesn't work out, the stock market tanks, you have to factor in all of those equations and be able to have some flexibility to say that, okay, here was the plan if this, and this happened. Okay, well, we hit a real tough run in the stock market as an example, then maybe you take Social Security earlier and it takes stress off of the withdrawals of the portfolio. To give a couple of examples out here, because, there is no, absolute best way to do it. If everybody knew when they were going to pass away, it certainly makes retirement planning easy, Peter.
Yep. And sort of, Chris, spilling over here into number 5, which may be the most important on this list for a confident retirement, is formulate the written retirement income plan. And a lot of people have tools. We've talked about this on the program. You've mentioned that the 401k and IRAs and investment accounts are fantastic tools. But if you were building a home and the contractor was talking with you and you said, well, let me see your blueprint. And they said, well, I have this hammer right here. You probably would not put a lot of faith and trust in that, even though the hammer is a very effective, very important, and probably will be very, very used. Even though it's a fantastic tool, it does not constitute a true plan. And so you've seen a lot of people with great tools, but they have not brought it together in that written retirement income plan that you detail as step 5 in these 10 steps to prepare for retirement.
Peter, when we talk about income, let's delve into that a little bit. What generates income for people? The traditional method would have been, a combination of high quality dividend paying stocks where dividends are profits off of the companies that you own stock in. And we still use a lot of dividend paying stocks because that's a very good source of income. And a lot of times it can be very reliable income as well. You can look at the track record of companies, how long they've been paying these dividends out. And then, a lot of folks here on the traditional sense will say, well, that's where I'll get income off of my bond portfolio. Okay. Well, you have to remember interest rates have been very low for, let's at least say 15 years, and they're incredibly low today. It's not like you can walk into a bank right now with $1 million, as an example, and get 5% on a CD, or walk into a broker's office or an advisor's office and say, I want to build a ladder off of high grade investment quality bonds that pay 5% interest. Okay. Well, right now, I believe the average between a 50% stock, 50% bond portfolio, the yield or the income that comes off of that is less than 2% right now. So you really have to refine that search and say, look, I probably need to look at some non-traditional ways of doing this, because the traditional way of doing this has changed, just like everything else changes over time. And maybe look at creating an annuity for yourself with a good quality insurance company that'll get you a guaranteed lifetime income for you and your spouse. If you're married, it may have the potential to have increasing income as well. We use a lot of those in our practice. Looking at some real estate investments inside your portfolio doesn't have to mean you're going out and buying individual properties. But again, diversifying and looking at other streams of income that weren't always there. So like Peter says, guys, having that income plan, again, with some flexibility that you can switch, go to a plan B if plan A needs some help, and, giving some assistance to your investment portfolio. A lot of times investments need a lifeline, and that's where your safe money strategy can come into play.
Well, again, that is part of designing that written retirement income plan. Such an essential step in building for the retirement confidence. And if you would like this full list of the 10 steps to prepare for retirement, pick up the phone, give Chris Mcintire a call. If you have not gone through the process specifically of mapping out that written retirement income plan, bringing all those tools, all those accounts, those investments, those IRAs, those 401ks, bringing those all together to map out how to create the income, pick up the phone, give a call, and request the time to sit down with Chris for that one-on-one complimentary review and strategy session to design your game plan for retirement. 800-868-1194, 800-868-1194. Again, the list you can go over on your own time. Just call and request that. Chris can email it or mail it out to you. And then the sit down review, the strategy session, the individual session to map out your plan. Chris provides that, waiving all fees and charges on a complimentary basis for radio show listeners, podcast viewers. All you need to do is give a call now, 800-868-1194. Chris, number 6 on this list, something that a lot of people understand. They do have risk exposure, but they may not understand the level of risk exposure because it's not written in red or in black and white on the top of our statements. But that is something that you can help people quantify the level of risk they actually hold in their accounts. And then you can compare that through some of your tools to what their appropriate acceptance level of risk actually is, and see if the two match or are off.
Correct. It's funny, Peter. I'll make a little insert some humor here that, everybody, when the market's going up, everybody wants to be a 100% stock investor. And then the day we get a little bump in the market, incredibly how conservative they want to get. So, finding out what your true risk tolerance is over the course of time and building a portfolio around that certainly helps. But, understanding risk isn't necessarily just in stocks. Like we were talking earlier here, is bonds, have a fair amount of risk in them as well. And right now would be a rising interest rate environment. So when the interest rates go up on new bonds, older bonds go down in value. And, the longer duration, we call it duration risk. And duration would mean I've got a bond portfolio, but none of the bonds mature, which means you get your money back for 10 years. Well, that's a pretty long-term bond to have in a rising interest rate environment. So, we have interest rate risk, duration risk with bonds. You also have default risk if something terrible happened to the company. And again, you can diversify all three of those away. The stock market, we obviously know that it has its own risk. And, right now we're probably looking at the supply chain side of things affecting like Ford Motor Company, GM, if you will. They're having a hard time getting the chips to put in vehicles so that they can sell them to consumers. we can look at, for example, in the United Kingdom, in England, for example, they're very short of truck drivers to actually take the gasoline from the refinery to the gas station. Okay, well, guess what's going to happen? Price of gas is going to go up. We've run into that here in the United States as well. I got an email from a client here recently who works at an oil refinery and said, hey, finally, our stock is going back up just as I'm getting ready to retire. So,
well, good timing for them, but unfortunately that can affect how much we're going to be paying for things on the other side. So there's always a double-edged sword and both sides of that pro and con equation there, Chris. But we do need to understand our risk exposure, and I think you're absolutely right that we first think when we talk about risk with our money, our first thought is we go to the stock market. And what if the stock market falls? Well, the bond market actually dwarfs the size of the stock market. It is significantly larger, and interest rates affect those bond values. Another big risk that we have, Chris, calculate taxes. Well, we've got to forecast out what those taxes may be, and those are subject to legislative risk. Things can change in the tax world and the environment, and we've got a lot of, I think, deserved concern right now that taxes may be going up into the future.
Yeah, and that's been one of the talking points here of the current administration is potential for increasing capital gains taxes, potential income taxes, and then several other ways of disguising taxes, increases in fees, and so on and so forth. So not only is inflation a risk of our purchasing power, but when we, off of the cost of goods rising, the stock market being stock market risk of, hurting our portfolio. Then we get into the tax side of things. When we do finally get to make a withdrawal from our portfolio, how much of that do we get to keep? Right now we're in very favorable tax conditions. And some of that is, like Peter said, depending on, what happens on the legislative side of things. The capital gains could be a big one that deals with non-IRA assets. When you buy something for a price and sell it for more than what you paid for it, that's a capital gains. Those taxes, could potentially be going up, as well as income taxes when you make those withdrawals from those IRAs and 401ks. Those are income taxes. And, if you're having to pull out and net $1,000, well, do you have to pull out $1,200 to pay Uncle Sam to get to your money again? And, right now, Peter, you and I have been talking about Roth IRAs, for years on the show, multiple times throughout the year. And, this is the time of year we've been doing a lot of Roth conversion. So working with our current clients to move money from an IRA or a 401k into a Roth IRA and make it as tax efficient as we can. Some cases we're doing 30, 40, 50,000. For some folks, it's only $10,000 that we're taking from an IRA, paying the tax on, putting it into a Roth IRA where it will grow tax deferred. Withdrawals can be made income tax free, not only to you, but also to your beneficiaries as well.
But again, that proactive step is looking forward and saying there is a potential issue out into the future. This tax bill that I will owe, it's pay me now or pay me later. I can control it today, or I can continue to defer to the IRS's plan, and putting it side by side and comparing what that bill would be, how much it will cost us, what that liability is. Chris, you can pretty easily help your clients come to a conclusion of, does it make sense to be proactive and pay a little cost now to avoid a larger bill into the future? And these are the kind of steps, ladies and gentlemen, that you can work through with the help of a qualified professional like Chris Mcintire. He's a self-proclaimed tax geek. He loves looking at these things proactively and can help you with that. But so many aspects of this list of moving through these 10 steps to prepare for retirement, Chris will work with you and walk with you through and help you formulate that plan. Pick up the phone, give a call. And again, if you would like this list, if you would like to go over it on your own time, it's fantastic food for thought. Chris Mcintire offers to send that out to you as well. You can get the list and sort through it, go through it on your own time, or enlist the help of Chris and the team from Mcintire Retirement Services for that game plan for retirement to formulate your own plan. 800-868-1194, the number to call. That's 800-868-1194. Chris, there were a few more steps. We're simply not going to have time to get to them all on today's program. That's why I do encourage people to give you a call, request the full list, or set up a time to sit down with you and review that plan, formulate that plan. If you've already got a plan, just double check it, ladies and gentlemen, with the trained, qualified eye of an experienced professional. Chris Mcintire here to provide that service for you. 800-868-1194. Chris, I appreciate the discussion. The list is fantastic, and you've always given us great guidance and food for thought here on the program.
Yeah, I appreciate it, Peter. Probably one of the best shows we've done all year right here. Peter and I, really work hard to get this information ready for you folks. I hope you enjoyed the show today, and stay safe, everybody. Thank you for listening.
Visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris Mcintire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Indexed or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract.